Hello guys, glad to have you on board again today. I finally found some time to just record a tiny video today. I'll try to be as quick as possible without being too quick either, because I just want to give you some as many informations as possible to get you independent. The week ahead, as you know, I'll be in vacations, so I just don't want to leave you alone out there. And we're just going to try reviewing as many assets as possible. Lots have been ongoing in the latest few days with the Fed moving things around. We'll see about that. Gold has been moving. I've been receiving a lot of emails, both from French users and English ones, so I'll try answering those concerns of yours the best I can. So, that being said, we're going to start right away, and there's a lot to say. We're going to start with the cryptocurrency sector. Not that big of a deal around that. We're still trying to digest the recent volatility in the Ripple. We basically we're going to start with this one actually, because this is the only one we got things to talk about. So since we've got that brutal volatility, we've kind of respected what was expected. We have that bullish support area, and we in the meantime also have failed to retrace back to the resistance, so we're kind of dying in between. And if you use the usual range strategy, remind you right now that what we've done in here is not necessarily that the market has switched to bullish. We're just building ranges that will then lead us to potential bullishness. So the thing is that any retracement to the down part of that range will be interesting to buy, but you also want to be real patient because you are facing ranges. And if you do know what I taught you about range, is the thing that you don't want to anticipate price action in a range. Can very well be like it's moving because of pricing, of volume inflow and outflows. So it's things that you can very rarely predict. So meaning that the advantage you have when using my strategy is very narrowed out there. So this is not when you market ranges is not the context in which you're going to make lots of money. So the context in here clearly is now a range, but it's not a neutral range. It's a bullish range, which means whenever you go to the downside, you might want to buy putting a stop loss below the lows, which normally suggests you shouldn't be stopped out, and then you should be profiting from a bullish outburst from that range. So take the bullish breakout of the range and make decent gains for the potential trend that could be on following. So for now, we still need to focus range trading, which means generally lots of patience. In ranges, the prices that are really interesting to play and to try trading are generally fastly offered, meaning we go there, instantly we find the buyers or the sellers, and we then get out. So the thing is that it's a risk management type of trading. You know about that. I've been teaching you that for long. So just apply that accordingly. It's not a dumb thing. It's the only way you can trade ranges decently. It's just taking advantages of the damn risk reward ratios, which means anytime you remain in there is not interesting. So this is where you've got the dumb area. So basically anything that is in there is none of your fucking concern. And as you can see, for now, we've just failed to get out. Anytime we were out of this, we rapidly found sellers and buyers, and we yet haven't reached out to very interesting prices in which you've got the best risk-reward ratios. Those I would like to take. So I will patiently wait and let the price work that area as long as necessary. And I just don't want to act too fast, which means it's interesting to buy below 0.45, but I'm not necessarily going to buy those prices. I'm only ready to buy if we go below 0.40. It's eventually even 0.37. So if we go there, obviously I'm going to take those prices. The thing is that it might be fucking quick. So if the prices are reaching there, you just don't want to put an alert out there because you're probably not going to be right in time to get the prices. Neither want you to just let a pending order out there. You just don't want to do that. Because you remember, if you apply the strategy in a range, you just don't want to pay a price. You want to pay a price action. If the prices are going there, they could very well flush you until there, and just give the signals in there, and this is where you want to buy and not there. So you just don't trade that with conditional orders. You don't put orders in the book. You just wait and put an alert, let's say nearby, let's say 0.40 would be an interesting price to put an alert on. If we manage to get ourselves there, then you have a look at how the price action reacts. You go to the lower time frames and you search for them buying signal on the 2-hour chart time frame by simply respecting the strategy. And you might want to wait for that signal to occur after prices have at least tested 0.37. Okay? So that's how it is. And then to the bull side, I don't really give a shit about that. I have no intention to reinforce my ripples on bullish breakouts so far. We're still early ranging, and as I said, the bullish breakouts is nothing I get to be concerned. So I'm going to put an alert up there just for technical reasons, because if we go there, I will just need to extend the range. So this is all that this will change. If we go to the upside, all I'll do is extending the range, but we're probably not going to go that far away from here. So that's for Ripple. Bitcoin basically just dying in between. Yesterday was a bullish engulfing pattern, but as you can see today, as for now, still needs to close that candle. Still feels like the market doesn't necessarily know where to go. After that bullish engulfing, we're straight into 20-day bullish volatility, and we're just dying out there. So apparently, maybe just a fake pump yesterday. The market is trying to digest this. We'll see if the resistance managed to fail. We're right in between, meaning this can be a breakout area. As you can see, generally, we go test the price once, fail, and then we break them up. So we've already talked about that level long ago, and back then we had the bullish breakout expected. We could just have them once again, not necessarily going to be to the moon, but I think if we have some kind of bullish follow through from yesterday's breakout, we could have a bullish upburst. I said it on Twitter. I just restored a tiny speculative bullish entry into Ethereum's, as in there as well we had a bullish engulfing yesterday. And I would like to see if there is some kind of follow-through today. Momentum remains into positive territory. It's not that big of a positive territory. It's just 13, which is not that great. But I still have some clues that we've made the highest momentum in month. Basically, the last time we had that bullish momentum was in May, suggesting that this, even if we haven't retraced that much, still remains high probability for us to remain above supports. And I just would like to see if all that bullish volume that we've been accumulating down those lows, we first had a pre-signal out there. Remember back then, volume has dropped, volume has popped. I tried to buy out there and I said, nah, it's not fitting the plan. We should be rising earlier, and instead of building that kind of nowhere to go range. So I said I'm taking profits off because I think we're going to go lower, and I just want to try making a tiny bullish entry at better prices lower. I made that entry right at there, and now I'm waiting to see if we manage to break a resistance. We do have a double bearish. We've been overbought. We've triggered the bearish triangle, so it's a double bearish signal. Even though sine wave remains in exit, means this is not something you want to trade bearish. It's just that bears tried to take control out there in a daily perspective. So you clearly, in respect of the strategy out there, what we had is that right now it's still too early to validate the bottom to be confirmed. So far it remains speculative. But what we say is that right now, let me just zoom in. We might want to go into the 2-hour chart time frame. Meaning that we've built a resistance, a daily resistance out there. Okay, clearly there's a technical level in here, and for now, short traders are holding this one. Doesn't mean the bulls won't take it over, but the thing is that I would like to see that happening, and so far it hasn't. So the bullish engulfing pattern on yesterday, I decided to take it. So I took a bullish entry, not right here. I took it when we broke that bearish signal. I had an alert in here. Basically, it triggered a trade right when it happened. So I bought out here. I said, I will apply the simple strategy. As this is a breakout trade and as the stop loss has to be set out there, I'm going to put a taking profit number 1 in here, right on the target. Okay, apparently the market has failed, double topping below that price, made a double topping here. But as you can see, it's just that I might have been a little bit too late into the breakout pattern. Generally, when you do trigger the breakout pattern, the market is chasing the size of a stop, just for risk management purposes. If the breakout level was just here, we probably would have got there, because this is where bulls like me who speculate on that breakout will have secured the trade and paid for the stop loss. Apparently it happened right here, and look at that. If you just lower the entry price, you perfectly get the 1-to-1 ratio, which means it's just that instead of buying in here, I should have done buying breaking up of that candle. This is probably what the robot trading have been doing, so they've been securing the gains out there, paying for the stop loss just as I would have done. And I think right now we're kind of digesting things, and we'll see if we have some bullish follow through. So right now we're right in between, waiting for validation. Okay, so my bullish entry is in here, and I'm now waiting to see if we go higher. Okay, so if we go higher than that, I will validate the trade and take a reinforcement position and rise the stop loss. As for now, it is way too early to say that. I still do have a market stop loss in here. If the market goes down, I'm out. This is a breakout trade, nothing close to what I generally do with you guys out there. I generally do speculative entry trading. This was a breakout entry, okay? So I will just switch it. It was a buy on breakout, okay? So buying on breakout has its own money management, has a stop loss at the market. When I speculate, I don't put a stop loss at the market. I put invalidation level. When I do trade breakout, I obviously need to have a stop loss, okay? Now, bulls should be in. We might be taking some time in here to just retrace, try to get some bulls in the game. We'll see if they do follow through. If they don't, I'm going to be taken down. Means that bullish speculation is no longer possible. If that's the case, then I'll just be out. I took a very tiny position out there. As you know, breakout trades has to be very low leveraged. I basically took 3 Ethereums, which means if we go down there, I might just take a $60 to $70 loss, which is really nothing to me. So really is a tiny breakout trade, trying to make some free money if for some reasons we were about to find some bulls. I'm just trying to figure this out. I would like to have 5 bullish impulse to make that happen. And you know how the cryptocurrency sector generally is trading. Generally, wave 5 is the extended wave, and this is the one the guys are generally pumping. So we have already made 2 on the go. I'd like to see if we can manage to make the 5th one or not. If we do, then I expect us to probably trigger some profit taking out there and then making a pullback out of that resistance, that daily resistance we talked earlier about. So this is the scenario I'd like to see. Breaking that up, securing the trades out of that big resistance, taking partial gains, putting the money back in out there, and just getting to build that trend up. Profit taking has to be done if we reach out to 500k, so just 500. If we go there, obviously as bulls, you have to trigger profit taking. You have no choice about that. This area is where you want to secure the buy and holds as well, which means I will take my entire buy and hold leverage in, but I will take the speculative trades out. Okay, meaning all the gains I will make from the speculative entries I'm doing right now, I'll take that money off the table and buy again the pullbacks with that money. If you just got it right, what I'm going to do with Ethereum, if they manage to validate the way I expect, I will just have the same strategy as I talked about the Ripple earlier, is that once the bullish volatility will be shown and on the price, we might have month to digest that to the downside afterwards in some kind of complex range scenario. I don't give a shit about what we're going to do in the range. All I care is that I need to have available cash to buy low boundaries of the range, because in here as well, I forecast that markets to be bullish ranging context, which means I want to take the profits on the high. I want to make sure to take money, and then I want to use that money to buy the lows until we manage to break this up. All right? So it can take months, it can take years to make that wave 2 pullback. I don't really know, and I don't give a shit about that. All I know is that once we've made that bullish volatility like we've done in the Ripple, as long as we don't go there again after building a long range, there is no bullish trend. We will remain into bullish ranges, which means ranging scenario in which we favor the possible bullish outburst, the possible bullish breakout to switch to bullish trend afterwards. Okay, I hope this was really clear on there. So, tiny speculative entries made yesterday. I don't know what's going to come afterwards. I just wait for further information right now, but I do take a step on the market right now, and this is what I just explained. So now moving out from the cryptocurrency sector, lots of questions I received recently are spinning around the gold and what the hell has been happening to this one, why has it been surging down and trying to break the supports. Lots of you are concerned about this. What should we do about that? Lots of other questions are concerning the EURJPY scenario, in which, and I'm not hiding myself from this, I still have a pretty damn pending loss. Approximately 7.5% of capital pending loss, and once again, a loss is not there until you took it. Doesn't mean that you need to put it away and go into some denials kind of psychological pattern. I'm absolutely not denying that trade. I'm working around this one, just trying to figure out how to manage my risk out there. So today we're going to take some time to talk about those two trades, and then I'm going to try to make a global review of other assets that I'll be looking forward for during the next few days, probably next week, in which I'll be off. I'll be in Malta for a cryptocurrency convention, so I'll be off the market, but obviously a trader is never 100% off the market. I will have my alerts out there. I will have conditional orders to trigger trades for me, and obviously I will do and present all the scenarios I'll be looking forward for right today, because this is why we do those things, for full transparency of the portfolio management. So obviously I will give you steps ahead of what I will look forward for in those markets. So first I answer your questions. So gold, is this bearish? Is this bullish? Is this whatever shit you think this is? I think this is just bullish no matter what, and we do have very interesting long-term risk-reward ratio trades. Today we're oversold, and we're not just oversold in the daily chart. I've been sharing this into TradingView. We're also oversold in monthly scenario. Last month was oversold candle with fucking huge lower shadow candle. Generally, what we do the next month is generally bullish. So what we've done in here is not bullish. We failed to break the highs of that candle, and we're nearly about to close August as we're 28th. So it remains 2 days of trading. I guess Monday is still going to be into August, sorry, what the fuck am I saying? Into September. I expect. Let me just have a look at this just to make sure. What am I saying? Yes, Monday is going to be the first. So it's terminating today. That's the last day for the gold. If we fail to go there, next month is going to be key element. We're still working that support area, but we're trying to make a lower candle close. So we're closing lower than the previous months, but the previous months remains heavily lower shadowed, and we've been oversold. Last time it's been happening, I remind you 2 things in there. That was the goal of that gold analysis. The thing is that gold is bullish long term. So what we do trade in here is a bullish range, okay? So you generally do take this and you wait for bearish retracements to buy again on the trend, as we have far better odds to break this high than breaking that low, for a very simple reason, okay? So we do trade long-term bullish range. So we do favor buying entries in support areas, and when the market is oversold, it generally stops. Doesn't mean it's not going to go lower. I heavily think that we might be going lower. All I don't know is how we're going to do it. And I think being oversold in a monthly bullish trend is not something you want to be selling. So if you think we're going to go lower, that's a possibility. I strongly think that we've been way too far already, and that we might have some retracement at least. So retrace to eventually get lower afterwards, but at least retrace back to resistances, because that's what we do in a bullish market that is retracing. We're breaking supports, but we're also testing multiple times the resistances. It's just that in a bullish market that is retracing, we go lower because we fail to break resistances, but we generally have to test those resistances multiple times before. And from what I can see right now, we might have a chance to test this same resistance once again. The $1,350 might be tested again. Maybe it could be a third fail in a row, or fourth fail, because we basically tested it first time in here. Might be the fourth fail, and in that case, I think we're gonna have we're gonna have more than enough strength to go to lower valuations afterwards. But we're fucking monthly trading in there, which means we could have 3 to 5 months bullishness to come, and everybody's trying to figure out if we should go bearish. I mean, fuck it. Just think it that way. If we do have very interesting long-term entries, meaning multiple month entries, why the fuck would you just change scenario day by day? You don't want to change. You don't want to be a switcher. I fucking want to remain a bullish trader. It's just you want to manage the risk. Remember, trading is about that. You're not here to play magic. You're not here to be smarter than others. You're not here to figure out what's about to happen. You're just here to make guesses and manage the fucking risk in between. That's all we do here. Okay, so I pick a side, no matter if that's the good one or the bad one. All I fucking care about is to take more if I get to be the good one. If I'm the wrong run, then I'm gonna give away the gains. I'm gonna surrender a tiny loss and move on to something else in which I'll be right. It's all I care about, finding scenarios in which I'll be right, and those scenarios I'll put leverage on them to maximize the gains. And those who I'm wrong, I'm just gonna surrender tiny speculative losses. So as you know, I remain speculative on the goal for now. I still haven't put leverages. All I've done is getting to maximum leverage of a speculative trade, which means I'm leverage 1 out there, and before getting into leverage 2, I want to have fucking confirmations, which means we do have a double bearish in here. I want to see that signal fucking broken up. I need to have a daily bullish signal. Can be either a daily bullish reversal candle, or this is kind of great. We're oversold today. So if tomorrow or later today we were to surge, that would be great. Or if we don't, and if on Monday we manage to make a bullish engulfing and a morning star pattern out of an oversold cluster, that will be great enough to me to consider this the end of a consolidation. And that is basically 1, 2, 3, 4, 5 impulsive wave, which means this is a wave 1 typology. We could just be making a very fucking long and complex wave 2, holding the support, and then we'll be about to fuck up a wave 3, which means wave 3 is probably going to be the extended wave after such long consolidation, which means we might take some nice fucking gains out there and might be exiting the trend channel. So if this today happens to be the low, I still don't know, still requires upcoming validation. If this happens to be the low, we'll have to break up that channel, which means you don't want to take your profits on 38%. Probably going to go there and fuck you up to get to at least 61, or let's say minimum 50% retracement. That will be the 2 targets of that next bullish impulse. But there is not a chance you get leverage or trigger breakout trades until we manage to get there again. But we do now have a pretty damn great structure to fuck up that market. We were mature enough to break back then, but the market decided it otherwise. Does that make the market bearish? No, it's just the market needed more time to digest. They wanted us to go slightly lower. We've done that. Now it's a fucking buying timing. But as I'm already fully leveraged for a speculative trade, I just can't take another entry. I would have done it if I wasn't already full in. I cannot go further than that, otherwise it's mean putting leverage in a market that still hasn't given away validations. And remember, when you do put leverage, you want to be sure the market has very tiny odds to invalidate the scenario. So you want to wait for validations. So this is what we do. This is what, this is what I do, then you do for your own sake. This is where I put the validation, which means in here, I'm obviously going to take a bullish breakout trade, Okay, it's going to be a buying breakout in here, but this is where I do get to validate the trend. Okay, if we get back to that resistance, I think we could have some bullish trade. But the problem is that we still have some odds for that market to remain bearish. No matter what, signals are still bearish. So if the prices all keep on following this, we could very well break that low. That wouldn't necessarily be the end of the game. Problem is that we could have some fucking bearish volatility out there, and you just want to be able to handle things correctly. So why have I remaining low leverage out there? Because I think we're long-term buying entry prices very interesting. Doesn't necessarily mean we cannot go there. I think we can go there. The thing is that you need to manage this into your risk management. So this is why I remain low leverage, because I have an average price in here. So basically, I'm basically making no gain, no losses at the current time. Or no, I think I have this average pricing, to be honest. So I might be slightly negative today on the gold, but I'm ready to support a 7 to 8% loss. This is why I remain leverage 1, because the loss I accept to take on gold in here is 7%, because I'm making a long-term monthly oversold cluster trade. So I need to let some room for that market to work this out. We're oversold monthly doesn't mean we're going to break resistance right now. It might take an additional 1 to 2 months to do it, and I don't want to take a loss, an unnecessary loss, if this was about to happen. Okay, so I want to be really patient out there. Really, I have a method, and I'm applying that method right now. I still do have bearish signals even though I want to buy. So until I get to put fully leveraged position out there, I want the bears to get out, and I want signals that the bearish signals are no longer traded. Okay, and until we have that, I just do nothing. Today we do have some bullish momentum pattern, which is not enough. It will put some kind of a break for those who are trading bearish. Okay, and I want to see the tiny bullish signals taking over the double bearish, and if that happens, that means the bulls are in strength, and that's what I would like to see, and that will suggest I can put the leverage out there. So that's for answering the goal. So no, I'm not panicking at all. All I think is that we had a very long and very complex retracement type of wave 2, in which right here we're reaching potential buying entry signals that I just can't take because I'm already fully in. Now, other scenario you were pretty concerned about was the damn euro-yen. Now, I hope you do have this in front of you. We're not triggering the taking profit pattern and failed to make a new high. So those who were panicking, saying, oh gosh, Phil is going to be ruined, and I'm going to be as well, because I blindly followed him. First of all, 2 errors in there. You shouldn't be blindly following me, and if you do want to follow me blindly, you do want to make it with the same money management. So yes, I've been leveraged on the EURJPY, but I wasn't leveraged by 10. I had a leverage 3 at best on that trend, and I narrowed that number to 2 when we managed to break that resistance, because right here risk was to the maximum to me. I did take short entries out there, and I took them all out and reduced the leverage to 2 because risk was maximum. I feared that the market was just making a trap out there, but I needed to have that fucking confirmation. Now we do have that confirmation, bearish sine wave, bearish momentum, and you can very well expect to have a red arrow to come in here. So if that happens, we will have confirmation that the bears are in control. The bulls tried, we fucked them up, and we retrace. For now, the euro is responsible for this. It's the euro in EURJPY that is causing the reversal. Now I would like to see the yen stepping in, and if the yen is stepping in, you might want to regret buying the EURJPY, because I know some guys have been trading this, and especially a friend of mine that is trading trendy and might be suffering some fucking losses in the next few days if he remained in that trade, because I think we are going to wrong foot him. We're going to see this, but basically to me, we just made, just as we've done in the gold a complex consolidation. The problem is I had to manage my risk in between for a simple reason. I was forecasting a bearish range, okay? So I was ranging on the EURJPY. I don't have a bearish trendy scenario out there. I'm basically forecasting retracements of that wave to find the E point to eventually even buy the EURJPY. So I'm bearish in a weekly forecast, in a weekly context, but the thing is that we can go to that target with multiple options. I thought that as we are late stages of a triangle, we should fastly get to the target. This is why I've been very aggressive on the EURJPY. The thing is that the market just decided it otherwise. It decided we would need more time to get to those targets. And this is why it plotted that extended corrective wave in between. It wasn't necessary, but the market decided to do it. So it's kind of the market tried to wrong foot me, and it will still prove me right in the end. So in that perspective, do you really want to surrender the gains, or do you really want to take a loss when you are still going to be right? To me, the answer is no. When I still have strong conviction that the market is going to still forecast the bearish range I was forecasting, I just want to manage my risk in between. Problem is in here, I was a little bit too much leveraged. I clearly stand on this. That was a mistake. And this is why I had to take tiny losses in between, because I had to reduce the leverage in a losing position, which means taking losses. I took partial losses on the yen. Clearly here he is, because the market tried to wrong foot me. But did I necessarily had to get entirely out? To me, the answer is no. This is why I remained bearish on the EURJPY, no matter how many people have been saying, Phil, fuck it, you should surrender and take the loss. I said, no, I'm doing this for two simple reasons. First of all, I'm not taking losses. I'm just reinvesting previous gains on those bearish entries, because remember one thing, I took fucking huge gains in here and fucking huge gains in here as well. So in the entire thing, I took approximately 19% profits. And right now, right at the top, I was losing 7.5. So as you can see, in the overall scenario, which is the fucking context that should lead us right here to the bottom of the triangle, I'm still fucking hugely positive. So this is the only reason why I haven't been surrendering that easy as the market just tried to wrong foot me. Because I'm just investing previous gains. This is the only reason why I got myself above my usual 2.5 to 3% maximum loss. This is what I apply. This is my money management when I speculate, when I make the trade entries on a scenario. So the problem is, in here I'm just managing the risk in an ongoing scenario. A scenario that has always already been validating to me. It's just that we are reaching the targets in a different way I was forecasting. So I just need to adjust, not necessarily need to take a loss. Okay? Because now, the way we are right now, I might have gotten to a maximum risk of 7.5% ongoing. But if we do get there, I'm going to take an additional 20% gain. So, do you really want to take a loss to re-enter later when you're still proven right? Obviously, no, I'm not going to get out. I'm just going to not take the loss right now to make a bigger gain in the end. And you can be damn sure that I'm going to reinforce the trades if we go there. If we get to validate again, get to the mid part of that range, I'm going to get back to leverage 4. I do want to take gains on that scenario. I still think it's going to come up. The only thing I needed is for that fucking in-between range, unnecessary range to terminate, and I think we have matured enough the trend to do it. ABC, ABC, ABC to me, the Elliott wave structure is gone, terminate, so I think we're ready enough to get back to the bearish trends. Either be the Euro or the JPY, and I think we're going to have both. Euro might be retracing, as I think Euro dollar is still neutral, but bullish in Euro, more bullishness in Euro to forecast, as long as we haven't been proven wrong. If we're going to have a look at the Euro dollar, we're brutally pullbacking right now, and I think we're going to find some bullishness in the Euro right there, but I think the yen is going to show up pretty damn soon. Euro is causing problems right now, but you can be damn sure that I think the yen is going to be the game changer in the next few days. As you can see, yen is trying to break supports. but the big one is in here, and we're still above it, and we're still trading, buying long-term areas, which means long-term buyers are piling entries out there, and they're just doing it smoothly. We still have some bearish short-term speculators, but anytime they'll terminate their shit, we're probably going to have to find some hugely bullish trends, because we'll have short-term bullish speculators, long-term bullish buyers, all going in the same direction, which means I forecast the next move to be trending. And we're probably going to have to break that resistance in the same time. Not necessarily going to go through the moon, but we could go at least to 92, which leads us from the current prices to a 4.6% gain in yen. That will obviously be there as well in the euro yen. So you can definitely just take a 5% additional thing to come. 4.6% will just pull us back to the bottom of that range, and you can damn expect that we're going to break this down. Alright, so I remain bearish on EURJPY as long as I haven't been proven wrong, because I think that now the euro has been reversing. I think the damn fucking yen is about to take over in the next few days. If it doesn't, and if we manage to break higher resistances, I will trigger the exit. Obviously, in here is where I want to take maximum losses, which means in here the bearish scenario is fully invalidated. I would have been wrong, and this will come up with a loss. That's obviously going to be the case, but the overall scenario will, no matter what, remain a gain. All right, just to set things real straight, I'm going to take big loss in here. If it comes up right here, I'm going to have to reduce the leverage once again. If we make our way back here, I'm currently leverage 2. I'm going to go back to leverage 1, which means in here is a 7.5% loss, in which I'm going to add 2%, which means probably going to be a 9% loss in the end if the market manages its way up there. But if we can just go there and fuck it up afterwards, which means all I'm doing this for is to remain in that market with decent risk management, with a loss I can afford. As I said, I took approximately 20% gain. I'm ready to give away half of those gains to take the risk to get to the next targets. If it proves me that I'm wrong, I'll obviously take my loss, but that will just be giving away some previous gains. Okay? And that's a specific case scenario. It's nothing close to early speculations, so I do apply a money management out there because of just reinvesting previous gains. So we'll see how this goes, and for now it doesn't sound pretty, and it doesn't look pretty for bulls, which means if we manage to make the close like that, they're not going to like it, and it means we could have the yen piling up later on, and meaning lots of problems to come for those who will remain bullish in a bearish euro yen. As I remain, to me, we have some more bearishness to expect. But we're not going to go straight line. It's going to be an ABC. You need to be sure, so whenever we go there, has to be profit taken, at least 50% off the table in here, and we're just going to take those gains back in the market in the B point. But in here, I'm probably even going to take 75% gain. I'm going to just take a remaining 25, or eventually just take it entirely in here and just get a sell again, the B point. But I think I'm just going to take 75%. Okay, so it's going to be a huge profit taking out there. I can expect probably another 15,000 gains if we reach out to that point. So obviously for a 15,000 gain, I'm still ready to take some risk in that market. So now that I've answered all your questions, sorry, there's another interesting questions about General Electric. I'm going to answer this one right away. So General Electrics, we're waiting for some kind of pullback in here. We're showing some ABC wave structures. Just like apparently right now we could be like in here from the previous bearish impulse. I want to wait for the market to just make the pullback, make the C wave, and then we should be terminating out there. So I need to wait. It's too early to get into some bullishness. So we need to at least wait for a couple waves. So I expect the price to just go lower and probably about $10.50 to buy that asset, to restore speculation. Okay, so in here I got two ongoing scenarios on two very different time frames. I have buy and holds in here for that asset, which means those I don't really give a shit about. They're in the portfolio and they're gonna stay there for a month and years, so I don't give a shit about those positions. I'm just buying the long-term supports of General Electrics. And I do have and do wait for speculative entries as well. Those entries will be triggered right here with a speculative risk reward management. There will be a stop loss, there will be a management, there will be breakout trades to confirm, things like that. We're going to have more time to talk about that. It's just I'm showing this right now because I think we may eventually get the two waves right when I will be away on vacation. So just watch out for this. If we range for a few days and then get a new bearish outburst, you want to be ready to buy the next bearish outburst. It's the one you want to be into. Apple, I had questions on this one as well, email questions. So Apple, big danger. If it managed to break the resistance, you don't want to be remaining bearish in there. But if for some reasons we were to fade again and retrace back to supports, you want to be fucking crashing that market. We have all the components of a market ready to crash. We had the bullish outburst with very tiny volumes. You can see 20-day average has been dropping very low in here. Bullish momentum, bullish prices, crazy momentum, something stupid, and then volume gets back in, rises the 20-day average. We even got huge volume on that day, and then the market waits. So the market isn't making new gains. We do have volume, which means traders are interested by those prices. We'll see. Either they will surrender and we'll have another bullish outburst in a bullish crazy bubble. This can happen multiple times. The thing is that whenever we fail the momentum, this is where all the stop triggers at once. So if Apple is going back to support once again, I'm triggering the crashing entries. That will be speculative once again, so it means first entry in here with a stop loss above the market top. And if we keep on going down, I'll take additional reinforcements on the way down. But that was an easy question to answer. So Apple still waiting for signals to confirm the crashing market. So far it's unable to do such thing. So now I'm going to make a global review of things I'll be looking forward for in the next following days. So US markets, obviously there is something to do out there. I think the market is bearish and is just going to I'm going to try making that bearish breakout trade. So I'm just waiting for the timing to do it. We're ahead of the US open. I don't think we're going to have the breakout right at the open. I think the market is just going to try oscillate. So I'm going to let you a few room to get there, but I'm going to probably take a breakout trade today with a target in here to pay for the stop loss, and that's all. That's all I'll do. Okay, or basically take the entire profits in here, just 1-to-1 ratio, and that will be a tiny 0.5% gain. So it's a 0.85 gain, but that's basically, I've been stopped multiple times, tiny stop losses, one after the other on the US. If I can take back some money, I'll be pleased to do it. That's a breakout trade, so it's not that one. It's not the kind of trade that's going to give you a lot of money. But basically, I would wait for them at the open to try test the resistance and get back here and try to make the breakout on the afternoon. Will be the best case scenario to me on the Wall Street's indices. So gold, we've been answered already. VIX, I remain bullish, heavily bullish on VIX. The risks are piling up, so the VIX will be bullish and even more bullish as we move on. So yes, the equities might try to go higher, but no matter how, even if they try to go higher, VIX is going to be rising the next following month. No matter what, risk is increasing right now. Even if valuations are trying to keep on going to the bullish side, no matter what, at some point we're going to have a reversal. Either the risk is going to be parabolic and prices will be as well. We're going to have to talk about this. It's going to be a huge information I'm going to release to you guys today, because this is really the heart of the problem. The thing is that we do have this in Wall Street, so you know, we have problem. End of trendings are generally parabolic schemes like things. So this is the current risk curve. Back then, in the trend, 2008, absolutely no risk, and now the risk is piling up, and now the risk is going parabolic. Okay, for simple reasons. Valuations are rising fastly, and the risks are increasing as well of that economic cycle to reach out to its end. We know about that, we clearly do. The thing is that some traders might doesn't want you to know that. The thing is that this is what we had on valuations. Valuations are rising fastly at the beginning of economic cycles, and then at the end we're having some kind of topping up thing, which means valuations are failing to make lots of new highs. Okay, the trend is slowing down the pace. The risk is increasing parabolic, the returns are slowly reducing, but they are topping up. Whenever you have this, generally consider this as the stock market price. Okay, this is what you have in terms of pricing in the stock market. Okay, and then two things can happen. You still have the parabolic volatility, okay. The thing is that at that point the market will have to make a choice when the two are crossing up, meaning that you're taking heavy fucking amount of risks and the rewards are literally nowhere, are literally in existence. So when you have this, you're taking risks for no reasons, and the market never does that. The market doesn't take risks for no reasons. The market do take risk when there is a reward to seek for. Okay, so the market will have to make a choice at that point. It will have two options. Option number one, we follow the volatility, which means the fucking valuations are going to surge again. That's the big risk in Wall Street. I don't see any reasons for us to do it, but there is still a chance to do this, and as there is a chance, you might want to be cautious. You mean you need to manage that risk into your trading just to be ready not to be fucking fooled if this happens. You always have to be prepared for everything, and then you pick a side and you do trade that side. I've been picking the bearish side, clearly you know about that. I have everything I need to be bearish on Wall Street. For now, the prices are proving me wrong in timing, but I'm still thinking that they will prove me right in the end. So this is why I'm still thinking that we should sell Wall Street whenever the timing is coming. Okay, but the risk is this, is that whenever the risk crossing timing will come, Wall Street may choose to fuck up valuations, as risk will go crazy higher, but we'll have to make rewards to justify that risk, which means valuations will go fucking surging. This is something that has never ever happened in the history of markets. Because you generally don't make bubbles out of the entire equity market. You create bubble into some sectors of the economy, then those bubble bursts and trigger recessions. It never happened in the past that the entire economy, entire US economy went to overheat and create bubbles. Could very well happen. Meaning the SPX could be parabolically rising, meaning the entire U.S. equity sizing economy will be bought by the investors. That would be dangerous though, because you know every bubble bursts, and when the bubble bursts, it's not pretty. Which means that at a time in the future, the bubble will burst, obviously, which means the U.S. economy will lose 60% of its money flow in just a few days. And that's not something any economy can survive. So I wouldn't suggest we should do. I wouldn't suggest us to do this, because really nastier things will come afterwards, and I don't think the market will take that risk. But there is still a possibility. It's not because something has never happened that it won't happen that time. So you won't take that risk. You want to take accountance of that risk. So if this happens, you don't want to be holding the selling entries. You obviously want to release them, because the price is going to go surging crazy fucking higher, and it won't be rational. It will be a pure crashing market psychology, which means we'll go as high as we can without reason. Everything will be stupid. We'll pay for future pricings or whatever shit this is. So you just don't want to be a seller of this, okay? But the thing is that if we go there, I strongly think that the market will just do this, which means fucking bearish, and then dead cat bounce for the sectors that have been overpriced. So all the Nasdaq is going to crash. I mean, if we go down, Nasdaq is going to crash. Dow Jones as well. Those are two big bubbles. But the thing is that the market that doesn't crash, like the SPX, the market that isn't bubbling, the market, the S&P will just basically make a correction. I mean, 2 waves correction, and then we buy. That's what the US market will do. But obviously, those who were bubblish will do different. They'll go lower they'll get bounced stronger, and they'll have to make an additional final wave. Okay, so what has been surging in that economic cycle generally doesn't surge in the next one. Okay, take the example of General Electrics. It's been the leader of the S&P 500 in the 2000 bubble. Look at how it is right now. It's been correcting deeper because it had crazy fucking stupid valuations back then as well. But now today the valuations are stupidly low, and it's fucking time to buy that asset. This is investment. This is nothing close to speculation. So don't take those trades speculatively. Apply the buy and holds kind of management if you do buy General Electrics, but you do want to have this one in your portfolio. Tiny risk, huge risks, so tiny amount of shares in your portfolio, but if there is something you want to buy today, definitely is General Electric. So this is what we go as Wall Street, so this is why I remain bullish in there. Remain bearish. The thing is that this is context, okay? Now we need to take care of technical framework. So the context is bearish on the weekly chart. We still need to have a bearish context in the daily chart, which we don't. I think for now we've been terminating the correction out there as a fucking nasty triangle. This is where Wall Street basically decided to kill the volatility. They said, okay, no matter what, it's never ever going to drop again, so we're going to flush up all the volatility, and then Wall Street's stupid fucking gain machine with share buybacks and whatever shit this is to support the prices. I think now we're mature enough to go for a pullback type, wave fight kind type of pullback, probably general, and we generally were tracing 23.6 to 38.2% of the bullish impulse, so should lead us right here or right here. So my breakout trade, when the time comes, it might not be today, should be ready to trigger the profit taking. So I don't think today is going to be the timing for that selling breakout, but I'm ready to take it if that's the case. So thing is, like that, I think we're going to retrace probably back to the 23.6. So wave 4 kind of pullback, suggesting that in order to take the big short, the weekly short entry suggests a little bit more patience, probably pullbacking, surging the VIX and building some positive momentum on the VIX, and then we'll have a final stupid bullish rave, the one that all the retail traders will buy, and then the reversal will probably come. Brutal outburst, fucking up all the ETF holders and things like that, flushing out all the short sellers on the VIX that will be stupid enough to remain short selling the VIX at that point, but I think there won't be many of them. So probably gonna have a few put sellers that will be wrecked. I mean, those who've been selling puts at very low price will have to pay for the insurance at some price at some point. So those who've been selling short-term puts are okay. Those who will be stupid enough to sell long-term puts or longer-term puts, say 3 months expirations or things like that, they might have to pay for insurances they sold but not have the cash to do it. So you might expect some failures like AIG in 2008 to occur in that bearish phase. Okay, so look for those market catalysts whenever you see some racking into the banking sectors or VIX sectors. That will suggest a crash is already in motion and that the market is already switching to bear market. But we'll have plenty of time to talk about this. GBP/USD is another scenario I'll look forward for in the next few days. I was waiting for that pullback. I expect the price to go there, and any bullish signal in that area will be taken as a bullish entry action to make. As we do have an exit in here, might take an additional wave. So you want to be patient out there, but patiently buying that area as many times as necessary. If we have first bullish signal, you buy it. If it gets flushed out, buy the next one, but you want to put support on that retracement area, in which I think GBP/USD is going to be really interesting. Obviously, if we retrace back to that exit resistance, you do want to buy breakout as well. So it's either we go there for a speculative entry, or either the market retraces up there for a breakout entry. EURJPY, you know about that. Gold and silver, I've been talking about this one. US oil, I remain bearish on this one as well. I'm just going to delete that black box. So I remain bearish in here, don't know what we've been doing, but basically we're waiting for some kind of end of a range. We made ABC, so that bullish impulse is nearly terminating. I'm waiting for the bullish breakdown, bearish breakdown, sorry, of that double bullish, so triggering validation in here. So this is the speculative entry I've made. I will validate the trade when we'll go out there, so this means validation. Those of you who want to reinforce can do it. I won't, because it's too close for my entry price, so I'll just keep that bearish entry on the road and then wait for the breakout trades to occur right after. So this is where I'll get to make selling breakouts, and the next trading to me will be there, or consider that area whenever we'll be ready to break down and fuck up supports. Sorry about that. AUDNZD, remain bullish on this one. Don't know how long this will take. I mean, we're trying fucking lower shadow candles so many times. The market doesn't surrender yet. So at some point, nothing happens as long as we remain above those supports but below those resistances. It's in battle out there. It may take an additional time. I just don't know about timing. All I know is that whenever we'll get back to that resistance, bullish breakouts will be on the go, and nice fucking trendy move should follow through. So I want to make maximum 5 on 5 in here whenever the time will come. As for now, I still don't know. I remain cautious and ready to eventually lower the leverage if we were about to fuck up the support instead. So I'm just waiting for the price to confirm my conviction out there to get into putting some more money in that game. VIX is a scenario you already know about. I think we're piling up the VIX to get to release some pressure in the next few days. Problem is regarding the BUND scenario, so I'm reducing leverage out there. You know, it's a scenario I'm leveraged, so I've been taking partial profits in here. Already triggered some as we were reaching the target 1 expected area. Now the market is ranging and pullbacking. We're basically making wave 1, 2, 3, 4, 5, but making a wave 4 pullback, and I'll wait for wave 5 to get to more bullishness, as this doesn't sound like an extended wave. So to me, we've made wave 1, 2, 3 not extended. I expect wave 5 to be. So wave 2 target is going to be just a 25% gain profit taking, and I think just making 1, 2, 3, 4, and 5 fucking going to be surging. So surging to target number 2, 25%, then I'll let the pullback and then go higher. Sorry, what did I said 25, no, 75% profit taking. Because remember, we have to play with expirations on those contracts, and this one is expiring on 13th of December. So heading into that, I think we're gonna have some pullbacks. So I do want to take massive profit taking out there, just to buy again later at lower prices, heading into the next expiration that will start approximately mid-December. That's it. We've made cryptocurrencies, we've made commodities, we've made forex, we've made gold, we've made yields, we've talked about VIX, we've talked about indices. So we basically covered it up. We talked about shares, so job is done. I'm gonna stop here, guys. Just gonna take the questions you might have left me. So if we break, then you buy. I'm looking for, yes, so do I. And as I said, if I do get to eventually buy 8,500, it's gonna be a breakout trade, which means very, very low leverage, leverage divided by 2 regarding the entry I will make below 4,200. So just like you and I have the same scenario. I would really like to buy lower prices because I'll be able to put more leverage out there. No leverage, but I have to put more money out there than I would do if I just had to trigger the breakout trade. So I would pretty much like to have speculative entries at lower prices, even if that means higher risk taking when you take the position. Breakout trades are lower risks, but far lower rewards in the end as well. I feel I have a few questions regarding Ethereum charts and the comparison with Ripple. For the boom of Ripple, there were external factors leading to a spike, what makes you believe that ETH will have a bull run just like Ripple. For that exact same reasons, you can just you just can't know if a news flow is going to be benefiting for Ethereum. I think there is a positive news flow out of this. Just don't know which one the market may take to trigger the pumping. So, as I said, either we'll have a bullish news flow that will trigger forced pumping up, just like it was the case for Ripple, or we won't have that, which means we'll extend the ranges as long as necessary, and whenever we'll get to break up those ranges, the same pumping will occur even if there is no news flow. Simply because at some point, when we stop selling, when a bearish market isn't going bearish anymore, at some point it reverses for just technical reasons. So as long as we hold the prices in there, can take additional time, and whenever we'll break a resistance, we'll have bears getting out and bulls getting in, which means we'll have bullish price action. So in the video of 13th of September, you speculate ETH heading toward 350 and then pulling back to 280. In this chart, you speculate Ethereum's running for. Yes, I do change. I mean, when I speculate, I move on with the market. If money management has to be done, if some position adjustment needs to be made, I'm doing this accordingly. I'm just doing nothing because I'm making a buy and hold, which means I can change my forecasting, but I'm not changing my position sizing because all I'm doing right here has a much bigger picture. I've been changing my scenario because right now, again, I think we might be heading toward 500, and this is the reason why I've been taking that speculative entry yesterday, because I think the potential is good enough to take the risks of getting in. But I could be proven wrong, and if I'm wrong, I'm just going to take a tiny loss and move on to something else, or wait for further signals to suggest the bulls might be taking over. So I watch videos every day with my morning coffee. Thanks, I'm learning the trading world with you. I bought Ethereum thanks to you, and made some friends of mine bought them too. We make a great deal. Please keep the news coming in Telegram if you go on vacations. Yes, I'll try to do this as well, but I'm not sure I'll be putting Telegram into the cell phone. So if I don't, obviously, let's say in the vacation time, you can have a look at the Discord. I think I'll be surely putting infos out there on Discord if I do take some additional things. But basically, for now, all I'll think about doing is either taking the reinforcements we already talked about, if we manage to break the previous resistances, or I'm going to take a tiny speculative stop loss and just get out and remain a long-term holding. Okay, so that's how it goes. And please, just once again, if you do copy me, meaning if you do take out the informations I give you in terms of trading signals, if you take them out of those videos and apply them into real trading with your money, you only, if you do this, really follow the money management associated. If you do say, Phil has conviction, so I'm buying, but I'm taking 10 times his leverage, you don't want to come cry to me when you get fuck up. Please don't do this, okay? Because if you do, I'll be there to tell you the hard truth that you've been doing bullshit out there and that you are the only responsible person for this, okay? So thanks, Phil. Always appreciate your analysis, and thank you guys for the kind messages. As we're done there, I'm just gonna stop here and upload that video. Wish you guys a nice week ahead, and we'll be pleased to talk to you again on October 8th. Bye, guys.